If you're investing or trading in the stock market and you're finding it hard to make decisions whether to buy or sell, you find yourself beating yourself up when you make the wrong decision, you find the stock moving in a different direction once you got in and you feel like the stock market isn't for you, well, don't worry, because I got you. I'm going to share with you 6 principles that I've learned from day trading that can help fine tune not just your trading, but your mindset and help you get on the other side and become profitable. So thanks for tuning in. And I got to tell you, I have been falling in love with the stock market all over again, which is pretty interesting because I always thought I loved investing in the market. And then I kind of went through a phase where I'm like, I don't really love investing. It's just something I do to make money. But I really do love like researching stocks, making a decision to get in, get out, and then just seeing my money make money. The ability to just see that we have the opportunity to just have like a printing press right here at our computer, a digital printing press to print money is so powerful. And so I'm falling in love with the stock market again. And it's really taken me back to my first love. And my first love has always been day trading. When I first started trading the market, I came out the gate as a day trader. And the reason that day trading was primarily my first love is because, number one, I didn't have that much money. And so I was trying to flip my account quickly. So I was like in and out of stuff in the same day. This was way before they had pattern day trade rules and all that. I was just trying to flip my account. But what I'm starting to realize, and as members ask me questions, and they're like, well, how did you do that? Why did you do that? Why did you make that decision? How did you make that decision so quick? What I'm starting to realize is a lot of the decision makings that I make and the detachment from my emotions and feelings, I'm starting to realize it actually came from being a day trader first. And so I want to share with you some of the principles, about 6 principles that I picked up from day trading that really helps me make a decision quick and helps me move in and out of stocks or options and, for the most part, become profitable. So let's talk about number 1. The first principle is I assume that I'm going to be wrong on my first position. So whenever I enter a new trade, whether it's long term or short term, I just assume I'm going to be wrong on the position. Now, when I say I assume I'm going to be wrong, I just mean I assume that I'm not going to get it at the best price, or I may not be buying it at the 100% best time. And so what that allows me to do, number one, it keeps me humble. Because you ever notice when you're like, this is the one, back the trucks up, buy everything. That's like the one time the trade goes the opposite against you, or that pattern can work 100 times, but on 101 time when you back the trucks up, put all your money into it, that's the time that it doesn't work. You feel me? And so to keep myself from being cocky, I just assume I'm going to be wrong. That's principle number 1. I go in and say, I'm most likely going to be wrong. But what that allows me to do is I usually buy a smaller amount on my first position into a new trade or a new investment. I typically buy a smaller amount. So for example, I like to get 100 contracts, but if I'm going into a brand new trade, I will test the water with anywhere between 10 and 25 contracts. And so that 10 to 25 just allows me to be in the game, allows me to get off the sidelines, and allows me to test the waters, and I assume I'm going to be wrong. And so I want to be wrong with a small amount. Once I get a feel for that stock or that option, or if I'm like, I bought it at this price and I knew it was going to pull back, I'm glad I didn't pull it back with 100 contracts and then only pull it back with 10 to 25, because now I can go in and add to my position at the price that I really wanted. Now, if the stock continues to go up and the option increases in value, then perfect. I'll also add to a winning position as well. But adding to a winning position is easier to do than adding to a losing position, especially if you put all your money into it the first time you made the purchase. And now when it pulls back or goes against you a little bit, you're like, I don't have any money left to repair or buy at a lower price. And so again, that number 1 principle that I learned from day trading is I assume I'm going to be wrong on my first position on the direction that it's going or the price. And so I test with a small amount, which gives me a huge amount of clarity just being in the game, but it doesn't make me panic because I didn't spend all my money and now I'm just hoping it comes back up so that I can break even if it went against me. I'm like, no, now I got money to deploy the amount that I really wanted. And so I may scale in and add another 25 and add 50. And then I'll wait till those 50 are working before I add the second 50 and eventually scale up to 100. So just being humble, assuming you're going to be wrong, will also allow you to be kinder to yourself the moment you buy up the stock or the option goes against you. You kind of can say, I knew that was going to happen. That's why I only bought a little bit. Now I kept my money on the side for the real movement, or now that I feel like I know the real direction or I can get the real price that I wanted. The second principle, it's more of a mindset thing, but we have a saying inside of Power Trades University, and that is, if it's not going up, then it's going down. And so when I get into a trade and I'm bullish and, it just maybe goes down and keeps going down, look, I don't sit there and pray over it, hope over it, come on, turn around. I'm like, look, if it ain't going up, it's going down. And when you're day trading, you have to make that decision immediately. And that's what I love about day trading. There is no waiting 6 months, 3 months. Let's see what happens. It's like, look, I bought this because it was going up. If it's not going up, then it's going down. And so having that mindset that if it's not going up, then it's going down, it allows you to close a trade out that you were bullish and thought was going up and immediately decide if you need to go with put options or start playing it to the downside. But just having that philosophy, if it's not going up, then it's going down, it breaks the emotional chain of like, I have to be right. I have to be right. I said it's going up, so it better go up. It's like, no, it's not going up, then it's going down. Let's close this trade out, switch, and go the other way. And I walked my members through one of my trades the other day. It was such a powerful exercise to walk through because I just do it. I don't really think about what I'm doing. But when they asked me a question, I'm like, oh, well, let me show you what I did. And it was very interesting to see that I made a decision within minutes of this option and the stock going against me to close that out and go the other way. And I immediately went profitable. We'll talk about how I was able to make that quick decision. So principle number 3 is the opposite of principle number 2. Principle number 3 is if it's not going down, then it's going up. So if we're playing something bearish, we believe the stock's going to fall and we got put options. Listen, if it's not falling, it keeps creeping higher and higher and higher. If it's not going down, then it's going up. That's the philosophy that allows us to break the chain of just hoping it continues to fall. It's like, look, we thought interest rates was high. We thought the Fed speaking was going to be bad news. And depending on when you're listening to this, lately it's been good news, even though it was bad news. It's like bad news is good news. It's like, look, hey, who am I to argue with the market? If it's not going down, then it's going up. Let's go bullish, at least short term. And that's the principle I got from day trading. It's like, look, we could go bullish just for the day. We could go back bearish next week, but at least for today, stocks are moving up. The market's moving up. If it's not going down, it's going up. Then let's play that direction. I have many of days where I've opened trades with put options only to turn around and buy call options before the day was over because I kept thinking we're due for a pullback. We're due for a pullback. But we're not getting a pullback. So it's like, okay, if we're not going down, then we're going up. Now, principle number 4, this is the one that helps me make the quick decisions. And I've learned this from day trading because in day trading, you don't have time to think. And I'm also realizing in regular trading, you should kind of take the same principle, but in regular trading, you kind of let things go because you have time. And so instead of making a decision when you're doing maybe a 6-month, 9-month, 1-year investment or a trade, you're like, oh, I got time for it to turn around. Oh, it's not going against me. I got 6 more months. And sometimes that's okay. But what that does is it puts off, it delays you making a decision when something isn't going in your direction. And what happens is you bleed out a little bit every day until you look up 6 months from now and you lost 1,000, 2,000, 3,000, 4,000, 5,000. Now you looked up, you lost your whole $10,000. The thing about day trading is it forced me to do principle number 4. So what is principle number 4? Principle number 4 is every trade I enter, especially when I'm day trading, I know 3 things right off the bat before I ever place the trade. I know what my exit strategy is, meaning if the trade goes against me, or should I say the chart turns against me, right? Because I'm picking a direction. And if the chart does something opposite of what I believe it should do, I know exactly where I'm going to exit and take a small loss. I know exactly where I'm going to exit before I even get into the trade. Number 2, I always know my repair strategy before I get into the trade. So I typically trade options. And so I always know what option I can sell to turn my trade or my investment into a spread and bring in some premium and lower my risk. I always set my charts up to where I know the option I'm in and where I would exit, the option I would sell if I need to immediately repair the trade. And then number 3, I know my reversal strategy. And my reversal strategy is back to principle 2 and 3. If it's going down, if I'm buying a put option because I think the stock is going down, I always have a call option on standby that I'm willing to buy if I'm wrong and it turns and goes the other way. Same thing happens with puts. If I or same thing happens with calls. If I am bullish and I buy a call option, I know where I'm going to get out if I'm wrong. I know what other call option I'm going to sell if I need to repair the trade. And then I know what put option I'm going to buy if the stock reverses and starts to go down. So I know my exit strategy from the one I bought, like when I'm just going to cut my loss. Well, when the chart does the opposite of the reason why I bought it. And then it's like, oh, but what if I just want to repair? Meaning it's kind of going sideways. It's not up, it's not down, but I'm losing time. I might want to deploy a repair strategy and bring in some premium or some money to reduce my risk. If you don't understand what that is, that's when you are doing spreads and you can sell an option against your option and lower your risk. And then I always know what call or put I'm going to get in case it totally reverses. So if I have calls and I think it's going up, I always know what put I'm going to buy just in case it starts to reverse and go down. Or if I have puts initially, I always know what call I'm going to get in case it reverses and going up. The beautiful part about that is what happens is when it's time to make a decision, you have so many things going on in your brain. You're like, I'm losing money. It's going against me. Is it going to stop falling or is it going to stop going up? You got all these things going in your brain. To then stop and have to research what call, what put you would buy or sell, it's making your brain or your computer, which is what your brain is, it's making it overload. And you got too much going on. You're like, I'm losing money. I'm trying to pull up the option chain. My internet is not fast enough. I don't know which one I'm going to buy. Oh, what's my break even? I got to calculate that. If you calculate all that ahead of time, here's where I'm going to exit. Here's where I'm going to deploy safety or repair strategy or AKA a spread. Here's what I'm going to buy in case it goes the other way. When you have all that locked and loaded on your trading screen, you're able to make decisions in seconds. You don't have to think. You don't have to pray. You don't have to hope. You don't have to get upset. You're able to make decisions in seconds. And when I'm able to make those decisions in seconds, that's the difference between breaking even. That's the difference between losing money and breaking even, and the difference between breaking even and being profitable on the day, especially when I'm day trading. All right. Now, number 5, the principle is I don't have to be right. I just have to be rich. Simply saying, I don't need to be right. I don't need my ego to be fed because I bought put options. It has to go down and I'm sticking with it until the stock falls. No, that's trying to be right. You don't have to be right. There's plenty times where I've bought puts like it's going to fall. It's not falling. I'm like, I was wrong. All right. Now, if you're a man, that's probably hard for you to admit, right? Wives probably know. Like my husband never admits when he's wrong. Fellas, we just got to admit when we're wrong. And that ego, that macho-ness carries over into the stock market. Or maybe some ladies need to hear that, right? They afraid to admit when they wrong, it's just so hard to say, hey, I was wrong. But it's usually the fellas, right? Y'all let me know. Is it usually the fellas or is it usually the women? But as a man, sometimes it's hard to admit when you're wrong. But in the stock market, you got to be humble and realize it's not even about being wrong. It's about being rich. It's about making money. And so I always come in and admit like, sure, I was wrong, because I don't have to be right. I just need to move in a direction that is telling me it wants to move for the day, because I don't have enough money to control the stock market. So I'm just trying to hook my caboose onto the train, whichever one is going in the direction that I need it to go. So if the train is in reverse, I'm not sitting there like, I told it go forward. It better go forward. I'm going to stand on the train tracks and get ran over until it goes forward. Like, no, I'm like, okay, let's unhook the caboose that was going forward and let's hook up the caboose on the rear so we can go in reverse with it. That's equivalent to the stock market going down. I'm like, look, it is not going up. Let's close out our bullish trades, our calls, and let's go bearish. And on the flip side, if the train wants to go forward, I'm not standing in front of the train like, no, I told you to go backwards. It's like, look, train going forward and they got way more power to run little old me over than I have power to stop it. So I get out of the train's way and I hook up and say, guess we going forward. Okay, let's get a ticket in that direction. And that's the same thing when the stock is moving forward or higher. Look, we don't argue with it. The market has spoken. Just hook your caboose up and let's go in the direction that the market is going. We don't have to be right. We just have to be rich. We just want to make money from it. We're not here to pass judgment on morality or anything. It's just like, look, we're just here to clock in, clock out, and hopefully with more dollars than we did when we clocked in. All right. Now, number 6, the final principle is, we're not married. We're just dating. All right. And so day trading is the ultimate player, right? It's the ultimate player. If you think back, I think back to my days in like, I don't know, high school, college, right? You think you're a player, but you're really just a little punk. But I was a player. I was a punk player. I don't know. But you think back when you were like a player, you dating women, or you a playtress? Would that be the equivalent of a female player? A playtress? I don't know. But when you dating multiple guys, it's like, look, we not married. I'm in college. You just having fun. You're not trying to get locked down and tied up with one person. My point is, it's the mindset of a trader, especially when you're day trading. It's like, listen, I'm not married to this stock. I'm also not married to this direction, and I'm not married to a specific strategy. So if you're in a stock and you don't like how it's moving, you're not married to it. Divorce that bad boy. You're not even married. You ain't even got to get a divorce. Just like, hey, stop calling me. Block, delete, don't call me no more. All right. Same thing with a specific direction. I will get in a direction like, I'm bullish. And if it's not moving higher, I'm like, look, we ain't married. We just dating. It's going down. I'm about to go run with the Bears. So I move over, and I'm not married to that direction. I'm like, oh, we want to go down? I'm going to come over here and date somebody that's bearish, right? That sounds weird. I'm going to date somebody that's bearish. But the point is, we're not married to a direction. If you start dating bulls and it's not going up, you're like, look, peace, I'm out of here. I ain't feeling this relationship. I'm going over here with the Bears. You start dating bears and the stock wants to go up, you're like, look, I'm good. I don't like how you treating me over here. I'm going to go hang with the bulls. We're not married to a direction. We're just dating it. We're not married to a stock. We're just dating it. And then we're not married to a strategy. So I normally do not day trade, but in this market, there's been so much volatility. I've recently gotten back to day trading because I'm not feeling comfortable holding stuff for 30, 60, 90 days because everything's been selling off. Then it rallies real big. And I don't know if we're getting ready for another sell off. So I've just been taking it day by day, week by week. But I could be like, well, I always buy 60, 90 day options. Or, I'm like, nah, look, this market right now is calling for some good day trades. I'm switching up the strategy. I am going over to day trade. And once we get back in more of a consistent market, consistent trend, I'll switch back over to my longer term or medium term swing trades. But for now, I've been doing a lot of day trading in and out the same day or in and out the same week. And it's been working really, really well for us. If you've seen the one YouTube video we did, we made about $167,000 in like 3 weeks, a little shy of 4 weeks. And it's been a crazy run, but it's like the market's giving us that opportunity. So it's like, let's tap in and let's collect the money. Remember, we don't have to be right. We just want to be rich, and we don't have to be married to a specific stock. We don't have to be married to a specific direction. And we definitely don't have to be married to a specific strategy. If a strategy you're doing is not working, it may be time to divorce that bad boy, or remember that you were never married in the first place. So there's no paperwork needed. You could just literally go start dating another strategy just that quick. All right. So I hope this has been helpful for you. Again, I'm falling in love with the stock market. Sometimes you forget how much money can be made so quickly, and how much money can be made without having to talk to a boss, without having to sell anything, without having to do anything but just lock in with you, yourself, and the computer. Sometimes that's just such a beautiful thing to be able to just print your paycheck from the computer. No questions asked, no permission needed. And man, I'm just remembering how good it feels. And I'm falling in love with the market all over again, because the market will always give us opportunity as long as we look for it. But then the market will reward those who are prepared for the opportunity, who are not sitting on the sidelines, who are not saying, one day I'm going to take that course, one day I'm going to get that information. Those who are getting the information are getting prepared for their opportunity. And those that are in the game are getting their experience of getting in, getting out, taking their first loss, making quick decisions. All of these things are going to pay off, and you're going to be able to print your own paycheck. I guarantee it. And remember, you never go broke taking a profit. That's the other principle I learned from day trading. That's the bonus principle, is that when you got some profit for the day, take the money, close it out, and you can come back tomorrow and see how you feel about the market. But at least the troops are home and safe, and they brought back some more Navy SEALs to go to war with them. I'll see you guys on the next episode.